Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting with the micro bearish scenario where we are looking for a double 1-2 for eventually a bigger wave 3 to the downside. In this scenario, the green count is the higher degree count compared to the blue count. So in green we have a 1, 2, 3, 4, 5, and then inside the green wave 3 we have the blue count being a 1, 2, 3, 4, 5. Now that means that preferably for the blue count the waves are shorter in time and price, and that's a bit of a problem for this second wave 1 over here, because if we take a look, then you can see this second wave 1 is much longer in time compared to the first wave 1. If you take a fib time from the high to the low of 1 to the high of 2, you get the two vertical lines, and this wave 1 is now almost 3 times longer in time compared to the green wave 1, and that's not really what you want to see, lowering the probabilities of this particular scenario. Also, you see a white 1-to-1 over here, taken from the same pivots to compare the length in price of the green one with the blue wave 1. And you don't want the blue wave 1 to also go beyond this level over here, which is sitting at 26.8k, meaning it has to find support in this blue target box here between 26.9 and 27k as a minimum, but time-wise it doesn't look too good. Now, if we go to the more bullish scenario, we're looking for this to be a wave A, B, and eventually a wave C to the downside. In this particular scenario, the most common target for wave C is between the 1 and the 1.236, taken again from the same pivots, which is between 26.8k and 26.5k, and just above the 1-to-1 again we have the target box 26.9 to 27k. So that is interesting as well, as price can find support on this area of interest, wick inside, and then eventually move back towards the upside. Now you also see that currently price is finding support on the white target box I have over here, which is between 27.4 27.5, and you also see the 0.618 in that same area. Now the 0.618 is a rare target for a wave C, not a common target, but mainly the 0.618 is above the low of wave A, and in a zigzag ABC you really want to see wave C going below the low of wave A. Now what is interesting here is that the low of wave A has a double bottom with the low over here. There's definitely some liquidity resting there, and double bottoms or double tops are like a magnet for price, so definitely looking for that double bottom to eventually be taken and see how price then reacts in this support area. Now if we look at the bearish scenario and we zoom in a little bit into this move towards the downside, then what I'm looking for here is the following count. So again we have a green and blue, green being the higher degree count, so we have a wave 1, 2, another 1, 2, then 3, 4, 5, finishing 3, then over here an expanding flat in a wave 4, not invalidated. Over here the 0.618 hasn't been hit, and there's also no overlap with the 1-to-1, as you can see over here, 27.861. So that works for then eventually a wave 5 to the downside. Now you see that the 0.5 on the chart is a maximum target for a wave 4. The 0.5 is taken from the high of 2 to the low of wave 3. And what is important here is the blue count 1, 2, 3, 4, 5, because if you take the same fib over here from the low of the blue 2, then you can see the 0.618 has been hit, and that's not what you want to see. So that is why for me the wave 4 in blue has to already be in, as we're looking for the wave 4 of green over here, and this wave 2 was quite long in time and quite like shallow, so wave 4 being deep and quick is definitely possible because of the rule of alternation. Now in this particular scenario you then expect price to continue its way towards the downside. Of course a bit of a longer range WXY is still possible, but you still expect a continuation down instead of continuation to the upside in this particular scenario, where again that double bottom is very, very interesting indeed for a target of wave 5. If price does move to the upside, then the invalidation 27.8k. In a more bullish scenario, the low here is in, and we are looking for a move to the upside. So in this particular scenario, this is the low, and you're looking for an A or 1, a 3-wave structure in an ABC for 2 or B, and now you're looking for a wave 3 or a wave C to the upside. In this particular scenario, you can see that this wave A is quite short compared to this wave C to the downside. This wave C is about 10 times longer in time compared to wave A, which is very, very uncommon, right? That lowers the probabilities of this particular scenario. Also, the 1.618 has been hit for then wave C, taken from the high to the low of A to the high of B, which is a little bit like less common target for a wave C, but a target nonetheless, so that is okay. But what's interesting is that the 886 has been hit, taken from the low to the high over here. And the 886, the moment the 886 is hit, any move towards the upside is likely corrective, meaning you either get a wave Y or you get a wave C, but that means that eventually the probabilities are higher, you're going to take this double bottom anyway. So even if price bounces here and moves to the upside, the expectation is it will come down once more to again take the double bottom, because any move from the 886 has a higher probability to be corrective and not impulsive, as the 886 is a common target for a wave B or a wave X, and it is a rare target for a wave 2, for then a wave 3 continuation to the upside. Now in this scenario, this wave B over here is then a WXY in a WX and then eventually a Y flat over here. And then this is your wave 1, 2, 3, 4, and eventually your wave 5 to the downside. The invalidation here is if price actually takes a double bottom at 27.1K. If we look at the CVD divergences, then we had big bearish CVD divergences at the high over here, but also more locally, there's some bearish CVD divergences going on with a lower high on price and a higher high on the CVD. These already played out over here because the target of the bigger bearish CVD divergences was this low. Now price kept pushing to the downside. Very nice indeed. Eventually, yesterday, it found this move to the upside, labeling this as then a flat ABC to the upside. Also ending nicely, by the way, inside the most common target area for a wave C. The two 1.618s taken from the low to the high to the low is 1.618, and the second one is taken from the high to the low. You get this area respected very nicely, as you can see. And then we have some bearish CVD divergences forming where the target is this low over here. The moment this low is taken, we say that the bearish CVD has played out, and the moment this high is taken, it is invalidated. So currently the probabilities then of the different scenarios is that currently in this range, the probabilities are higher, that we are looking at this move to the downside as an impulsive structure, not a three-wave structure in an ABC, but more of an impulsive structure in a 1, 2, 3, 4, and eventually a wave 5. Eyeing for the double bottom over here still, even because even the 886 has been hit, so even if price moves further up, still looking for eventually this double bottom to be hit, and yeah, basically continue the range. We have some news as well later this week. We have news over here on Wednesday and Thursday, so we might get some volatility as well. So maybe we're going to take the double bottom when the news hits, but that's of course up for grabs. We still have to wait and see, but at the moment this is the highest probability scenario from an Elliott Wave point of view. I hope this video was helpful and valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.